When assets increase by less than liabilities, owner's equity will decrease. For example, if you purchase $13 of inventory on account and then sell it for only $10, hopefully you see right off the bat that this is not a great business proposition. You're buying something at a high price and selling it for a low price. But let's see what it does to the overall balance sheet equation and our net assets. Purchase $13 of inventory on account. So if you bought inventory, your assets would go up, and it's on account, meaning you haven't paid for it yet, so your liabilities would increase. In this case, equity has not changed yet. It's when you go and sell this for less than the cost, that's when the owners lose. We're going to sell it for $10. If you sell it for $10, first you have to get rid of the inventory. So your asset will go down. When you give inventory away to customers, that's an expense that we call cost of goods sold. That reduces our income, which reduces retained earnings. Then, in exchange for that $13 of inventory, we are going to get $10. Since it just says sell it for $10, you can assume it's for cash. Our assets go up by 10. Since the liabilities are not affected by that transaction, it must have increased equity. Since this was a transaction with a customer, we will call that a revenue. Let's see where we're at now. If we were to compute our asset balance, we have $10 in assets, $13 in liabilities, and we have a net loss, which reduced retained earnings by 3. Let's look at another transaction. If we borrowed $13, and then owners withdrew $3 in cash, or we paid a dividend of $3. So let's borrow $13. We're going to bring in $13 of cash. We borrowed it. No change in equity yet. But then we use this cash that we just brought in to pay a dividend to the owners. Reduce assets by 3, and it's a dividend of 3. I'm going to put it down here, but it is a dividend of 3. Let's compute our balance. We have 23 minus 3, that's 20, minus our liability balance of 26, so 20 minus 26. This is not a good sign. We do not have any net assets. In fact, we're negative. Why are we negative? Because we pulled $6 out of our retained earnings by creating losses and paying a dividend. Hopefully you can see how that all works together. We're going to move on to preparing the financial statements. But if you can get the logic of how this works, it will go a long way for your understanding accounting.